All right, good evening and welcome back to another session of theory. This would be the 10th session of the ongoing series, and a warm welcome on behalf of GTCFX. This is your host Harsh, and also a humble welcome to and also a humble welcome to all who are watching us live on YouTube. If you do have any problem or queries, please feel free to type in there and I would be addressing it. If there is any if there is any problem or any questions that you might want to ask for those who are joining from YouTube, please type in a message there and I'd be more than happy to answer. Sometimes the feed does stop, but I think it should be fine. All right, so once again, a warm welcome to those who are joining on Zoom and YouTube. This is your host Harsh on behalf of GTCFX. Let's get started off. Just a small announcement before we start. This is the last theory session for season one, and we are continuing this season every Tuesday uh, once again. So we'll be starting season two from next Tuesday, another 10-week series. So please continue joining. It would help us to it would be a revision session and also it would help us add confidence and also practice. All right. So let's get started off with the risk disclaimer as always. I hope that those who are joining from YouTube are able to watch the screen and audio is okay. If you are okay with the screen and audio, kindly type in a message okay. It would be a relief from my side because I am facing some issue here. All right, let's get started off. All right, thank you, Anthony. Shuklaji, is the screen visible now? Okay, Anand has confirmed that audio video is okay. Okay, Jaideep has also confirmed. Okay, Mark, I think please confirm. I'm moving my screen now. Is it okay? Please confirm if you are able to see impulse wave, diagonal waves on the screen now. Please kindly confirm if you are able to see. Okay, let me reshare the screen. Let me reshare the screen, please. Please confirm if you are able to see it now. I have just restarted the sharing. Okay. Still not able to see. Anyone able to see the screen, audio and video? No? Amazing. Only Arnold is able to see. No one else is able to see. That is very. Everyone is joining from Zoom. Only white screen. Just a moment, please. I have not faced this problem earlier, but let me share it once again. Let me stop the share and I will start once again. Please be online. I'm stopping the sharing and I'm starting the sharing once again. Everyone, humble request, please be online. Now, are you able to see the screen now, please? Okay, okay, okay. Thank you so much. Thank you very much. Let's get started. I think it got paused in between. Okay, I think the stream is fine now. All right, thank you everyone for your support and confirmation. Let's get started off. Okay, so those who are joining in for the first time, I think everyone is or repeat except I see my brother Sam. How are you doing, Sam? Good to see you after a long, long time. And Anthony, you're joining for the first time. If you are joining for the first time, please let me remind you, we are extending this session. I think Merkel has joined for the first time. We are extending this series. We are starting the second session, second series from next Tuesday. So it will be another 10-week series extended. And don't worry if you are joining for the first time today's session. Please sit tight and enjoy. We have we have almost covered all the technical analysis. The last portion, which is a bit tricky one, we will try and cover today, and we'll also try and touch base with the practicals after this session. All right. So once again, thank you everyone, and let's get started off. We are going to discuss diagonal waves today. The impulse wave, the motive waves were discussed yesterday, last Tuesday. Impulse and diagonal waves. Yeah, every session is being recorded, Isaac. In the YouTube playlist link I've shared, I'm again sharing it right now. Every session is recorded. Please follow the YouTube link, and if you have any problems, write an email to me. I will sort them out. These are the YouTube playlist link. So last Tuesday we discussed five patterns: the impulse wave, the extension, the truncation, the ending diagonal, and the leading diagonal. Okay, Mark, don't worry, brother. It is a small family of ours. Even if it's your first session, don't worry at all. Uh, Continue attending all Tuesdays, 4 p.m. Dubai time. In the next 10 weeks, you will not be saying these words. You'll be very happy. Okay. And even today, you'll be happy going after the session. All right. All right. Now, before we start off the corrective session, let's go through the risk warning first. Over the counter margin derivative contracts, including contracts for difference and spot foreign exchange, are complex instruments which come with a high risk of losing money rapidly due to leverage. I hope everyone knows what's a leverage here. You should consider whether you understand these products work and how these products work, and whether you can afford to take that kind of risk of losing money. Independent professional advice is highly recommended before any kind of investing, and this webinar serves an educational purpose and will not include any financial recommendation or advice. All right, now we I think we still have easy 35 minutes. I will quickly revise what we discussed last Tuesday. So this is the first. pattern of the Elliott wave structure, which is the most common, the most easy to identify. It's called the impulse wave. Impulse wave falls under the category of motive waves. It moves in 5 waves labeled as 1, 2, 3, 4, and 5. And there are certain rules which I would like to revise quickly. Waves 1, 3, and 5 are motive themselves. That means they subdivide into 5 waves each. Wave 2 and 4 are corrective. That means they subdivide into 3 waves each. Wave 3 cannot be the shortest of 1, 3, and 5. It's a very important rule to consider. Wave 3 always ends above wave 1, which is quite obvious. And one more important rule to consider is that wave 4 never enters the territory of wave 1. This is the rules which we need to remember while we are plotting a potential impulse wave. All right, these are the rules again. Wave 2 cannot retrace more than 100% of wave 1. That's the first rule, sorry. 3 terminates always above wave 1. Wave 3 cannot be the smallest between 1, 3, and 5. Again, 1, 3, and 5 are motive, 2 and 4 are corrective, and 4 never enters the territory of wave 1. I'll be a bit quick because it is already discussed last time. That's an extension. That is an example of an extended wave. Extended wave is also a motive wave. It's also an impulse wave. But one of the wave that is either wave 1 or 3 or 5 is elongated. Here I'm trying to show wave 3 elongation, and within the third wave I've also shown that the third of third wave is extended. So you can see the bracket 1, bracket 2, bracket 3, 4, and 5. And between that bracket 3 is subdivided into 5 waves: 1, 2, 3, 4, and 5. And again, if you can see the subdivisions of wave 3, it is also subdivided into 5 waves. So it is called a third of third wave extension. Normally, this third of third wave extension occurs in an impulse wave, in between the impulse wave. Right now it is going on. Let me show you as we speak. I have a habit of toggling between the charts and theory, because the moment you see something on the theory, and if you can reflect the same on the chart, uh, it helps understand, and it goes into the heart straight away. Now you see here the red cursor. Please watch the red cursor. That is wave 1, wave 2, and then again wave 1, wave 2, and then again wave 1, wave 2, wave 3, wave 4 is going on, and maybe wave 5 will go up there. So this is a classic example of a third of third wave extension. A third of third wave extension, a third of third wave extension. I can also label if you want. It will just take 1 minute. Uh, I have to change the degree, but it won't take more than a few seconds. This is the first wave of a larger degree. And then you have the second wave, the The second one, I'm pushing all their 3, 4, 5s higher because they are not complete. This is the second degree. And finally, we have the third wave of yet another smaller degree. Possibly we have wave 4 and we are going to see wave 5 complete here. So I'm changing the degree here as well. Please don't worry if you get confused. The degrees are nothing but like a grandfather is the highest degree, like this one. Then this orange bracket is the father, and the 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 subminute that is a Roman is the son. So as the smaller waves continuously build the longer waves, which we have seen in the basic structure. So don't worry about the degrees. We'll cover in the second session as well. The most important part is to understand is what is the third of third wave extension looks like. This is the third of third wave extension. All right. Okay. Truncated is very simple. Truncated is, I'll quickly explain. It is normally seen in the fifth wave, and the fifth wave within the motive structure, it falls short of printing a new high above wave 3. But it is still unfolded, subdividing into 5 waves. It just falls short and it does not print a new high. Ideally, it prints a new high, but in this case, it fails. It is a very rare occurrence. Doesn't normally. I have not seen a truncation recent times. I won't be able to show you on the chart. Sorry, but truncation is just shy of the wave 3. So impulse is the third pattern of a motive wave is the diagonals. And there are two diagonals. One is an ending diagonal, which I have shown here. Ending diagonal normally occurs in the fifth wave or the C wave of a correction. Correction, we are just beginning in 5 minutes. Ending diagonal is again a 5-wave pattern, 1, 2, 3, 4, and 5. The only difference between an impulse and an ending diagonal is that 1, 3, and 5 are subdivided into 3 waves. 1, 3, and 5 are subdivided into 3 waves. See, this is a very technical subject. When it comes to Elliott and when it comes to understanding the patterns, it's a very technical subject. Don't worry if you're seeing it for the first time. Next season, it will all be clear, and the moment you practice on it, it will be more clear. All right, but once you know the subdivisions, you can identify the pattern. And once you identify the pattern, it helps you trade. As simple as that. It took me several years to understand, but it will not take that much time for you guys. All right. So this pattern ultimately becomes a 5-wave pattern, and each wave is subdivided into 3 waves. So it becomes a 3-3-3-3-3 structure. All right. And the second important rule within the diagonal is wave 4 always enters the territory of wave 1, which is not in the impulse waves. Okay. And the leading diagonal is just opposite the ending diagonal. Ending diagonal is a ending pattern where the trend is just about to end. The leading diagonal is a beginning pattern where the trend is just about to begin. All right. So, and that's why the name leading diagonal. A leading diagonal normally is seen in the first wave or A wave. It is always seen wave in the first wave of an impulse or A wave of a correction. I have not written this over here, but remember, please, first wave of an impulse or A wave of a correction. It is a five-wave structure labeled as 1, 2, 3, 4, 5. The only difference here is wave 4 enters the territory of wave 1 always, unlike the impulse wave. But the subdivisions of 1, 3, and 5 are again 5, and the subdivisions of 2 and 4 are 3 waves. So it becomes a 5-3-5-3-5 structure, which is normally a motive structure. All right. So please don't worry if it's going a bit faster. We have done this last Tuesday. That's why I'm going a bit fast. Now let's start the discussion of corrective waves. Now I will take 5 minutes each to explain uh, the corrective waves. Now please understand before we start, don't worry about the time. We can go until 6:30 as well. Uh, Corrective waves are counter trends. Okay, that means they go opposite the trend. They are opposing the trend. Basically, they don't have a motive. They are only forming to check the rally or drop. First thing, all right. Second thing, there are many combinations of corrective waves. The most common are zigzags, flats, and triangles. So let us understand the zigzag, flats, and triangles first, and the combinations we will try and take it in the last session, at the last. Okay. So there are many combinations. Let's finish the most common ones: zigzag, flats, and triangles. Okay, let's start with the zigzag. Now, the third point to remember is corrective waves are three waves structure, always labeled as A, B, C. Only exception is a triangle, which is labeled as A, B, C, D, E. All right. Okay, sit tight and understand the patterns here, and then I would like to take you on the practical chart. Now, the first pattern is a zigzag. A zigzag is the most common corrective pattern. It is also known as a 5-3-5. It means business. It doesn't take much time to unfold. It's a very quick pattern to unfold, one of the best to identify in the corrective waves. Otherwise, corrective waves are very tricky. Now, wave A subdivides into 5 waves. I will try and draw the wave structure here, but normally it is rubbing itself. That's good. I don't have to use an eraser. So wave A is 5, wave B is 3, like this, okay? And wave C is again 5, okay? So it's a 5-3-5. And wave B, only one trading tip or just practical tip to remember, wave B normally reverses from a 38 or 50%. It doesn't go much deep, maximum 68% retracement and turns lower. All right, that's a zigzag. It's a 5-3-5, easiest pattern to identify. Okay, now here comes the double zigzag. Double zigzag means you have a 5-3-5 pattern coming twice. So here you have the first pattern. Now this is the first pattern. Now I'm trying to explain you in a very simple form, and the labeling, don't worry about the labeling WXY. Let us understand the pattern first. This is the first pattern 5-3-5, okay? And that is the second pattern 5-3-5. So just imagine that we are connecting the two 5-3-5 patterns with a bridge. Okay. So ultimately, the pattern appears like this. The first pattern, 535, a bridge, and the second pattern, 535. All right. So this is the first zigzag, a bridge in between, and that's the second zigzag. Is it okay? Or is it okay to understand, brothers, everyone? This is the first zigzag, a bridge, and it's a second zigzag. If this much is understood, the labeling is not very difficult. The rule for the first pattern is always labeled as W. When I say pattern, it's a zigzag. Zigzag is a corrective pattern. So the first pattern is labeled as W. Please remember the bridge which is also a three-wave correction, the bridge wave is labeled always as X. I repeat, sir, the bridge pattern is always labeled as X. And the last pattern, the second pattern, continue labeling as W, then Y, and third one, if it occurs, it will be Z. So the the corrective patterns are labeled as W, Y, and Z, and the bridge patterns are labeled as X. Is this clear, sir? If there are any questions, let me know, please. This is a rule. That's why I'm saying you have to label as a W, X, and Y. A W consists of A, B, C. What is the ABC? An ABC is a zigzag over here. As simple as that. All right. So the first pattern ABC labeled as W, the bridge wave is labeled as X, and the second pattern ABC is labeled as Y. Now, if we go a step further, there is a triple zigzag. There are three ABC patterns. The first ABC labeled as W, the bridge wave labeled as X, the second pattern ABC which is labeled as Y, again a bridge which is labeled as X, and the third ABC which is labeled as Z or Z. This is a complex correction. Corrective waves are really complex. They unfold, they take their time, they test our patience, they do everything that confuses us, and this is one of the first confusing patterns, which is called a triple zigzag. But the easiest portion to identify is one zigzag occurs after the other zigzag. All three are zigzags. That is the easiest part. How to identify this pattern? First things, corrective patterns, no one can identify at the first stroke. I repeat, sir, corrective patterns, none of them can really identify at the first stroke. The first stroke is 535. So any analyst would say, okay, this is a zigzag and the market is going to turn. So they end up buying over here. But the next pattern is again corrective, A, B, C. So when you see an A, B, C correction, at this point, we realize that could be an X wave. So let us not take a chance. Take your profits, come out, and wait for the next pattern to unfold. If this is a 535, you have got a double zigzag. Again, you can pick up. Again, when you see a corrective wave, you need to understand that this is a corrective wave, not an impulse. The only identification tool is between 3 and 5 waves. All right. But the markets always give us an opportunity to exit, even if you have entered in the wrong place. This will take time. It will definitely take time. It won't come in the first way. If you're watching it for the first time, have patience, brothers. This will take time to understand. All right, let's complete the theory and then we go on the charts and try and identify. All right. Then comes the flat correction pattern. Now, the flat correction pattern, unlike the zigzag, is also a three-wave pattern, is labeled as ABC, but the subwaves are different. The subwaves are, someone has transcribed, okay, no problems. If you want to transcribe, it is okay, I don't mind. Wave A is three waves, okay. Wave B is also three waves, and wave C is five waves. In a zigzag, it was 5, 3, 5. Here, it is 3, 3, 5. That's the only difference. And the other difference is a bit practical one, where wave B goes much deeper in terms of correction. The wave B almost equals, it goes almost equal to the beginning of wave A. It takes a retracement of 78%, sometimes 88%. But this is a standard flat, but it does not go above the high. Okay, that's a standard flat. Expanded flat. Now, if you see the pattern here, the expanded flat pattern is also a 335. They are all 335s only, but here, did you notice the difference between where B is ending? Here, wave B is ending above the initial point of wave A. This pattern is the most difficult to identify, and even after identification, it requires a lot of confidence to trade, and it is called a trader's nightmare. This pattern, normally called trader's nightmare, because wave B uh, would end above wave A, and then reverse. All right, so this can take us both sides, because many traders would want to believe that a new high. Anyone, I just wanted to ask a question. Anyone here who started the transcript? Okay, I don't know. Okay, no problems. Let's continue, please. We've got wave A, wave B ends above the term initial point. So what many traders want to believe is that it is going above a new high, and the trend is reversing. So they double buy, and suddenly the trend is continuing on the same side. So it's a very difficult pattern to comprise or identify. The only way to do is to identify a three-wave correction. This is the only way to identify. All right. Something might be happening in gold right now, but very risky to go and sell gold right now. Okay, that's an expanded flat, and the third one is a running flat. Running flat is a very, it's again very similar to expanded flat, but so wave B goes above the initial point of wave and everything is fine. And suddenly, wave C, if you notice wave C, it is falling short of wave A. Did you see that? Now that is a running flat. It subdivides into the same structure 335, no change there. So wave A subdivides into three waves, wave B subdivides into three waves again, and wave C subdivides into five waves. Everything is same. The only portion is this wave C falls short of wave A extreme. It shows that market is in a hurry and it does not want to complete the pattern going below wave A. Bulls are not in the mood to give control to bears to complete the pattern, but the structure is still complete. That's called a running flat. All these are corrective patterns, sir, and a zigzag is the easiest to identify, and the third one is a triangle. Triangle, I would show the practical way of the triangle, and then we will go on the charts now. We don't want to spend too much time on theory where most things are just on screen, on paper. So this is a triangle. In an uptrend, let's say the trend is rising, okay? Here the trend is rising. So a triangle is a five-wave structure. This is A, B, C, D, and E. It's a five-wave structure. Please remember, all other corrective patterns are three-wave structure. Only a triangle is five-wave structure, which is labeled as A, B, C, D, E. It's not labeled as 1, 2, 3, 4, 5. It is labeled as A, B, C, D, E, as we have shown here. And once the triangle is complete, we will have a terminal thrust wave 5. Now there are many shapes of uh, a triangle pattern. Now this, uh, okay, let me show the first one, the easiest one, okay? Now this is an uptrend, so that will be wave A, wave B, wave C, D, and E. Do you see a cone here? A, B, C, D, E. Did you see a cone here? It's a contracting triangle. All right, the other one I've shown here, this is a barrier triangle where resistance is constant, supports are rising, and then there is another barrier triangle where support is constant, resistance are dropping, and then there's an expanded triangle. Expanded triangle I'm going to show on the charts. Let's go on the chart, please, and then finally we'll come to the combination. Let's try and identify all the three patterns which we have just discussed in the theory. Sometimes even I cannot find the patterns, but I'll try and find out most of them. We've got to focus on the corrective waves, okay? I'm labeling here, and then we will identify the corrective waves. I'm labeling here. So this is the label, the first label, the first impulse wave, which is a five-wave structure, and I'm quickly going to change the degree. Now the best part of okay, can you all see the screen, please? I did not ask, but is the screen okay? Also, those who are watching from a live YouTube, I hope everything is fine there. If you do have any issues, please type in. Okay, okay. Thank you, Brother Arnold. Thank you, Anthony. Okay, now please sit tight and witness let's try and identify what are the corrective patterns it has formed. So that was the first wave. It is very clear that it is a five wave structure. Now it's a daily chart, so we cannot see the subdivisions of five waves, but it is an impulse. It's a clear impulse, five waves. Now please pay attention to wave 2 here. Wave 2 has unfolded in three waves. I'm not labeling an ABC just to save time. This is wave A, wave B, and wave C. Okay? Do you see that it's an expanded flat? Oh, sorry, running flat, please. Wave B goes above wave A, and wave C falls short. It doesn't go below that point. That is a you can call it an expanded flat or a running flat, but it's a running flat as well because the C wave does not drop below wave A. All right, so that's a corrective pattern. And from here, it again starts an impulse structure. It goes all the way, five waves, subdividing into three and completing the wave three. Now, please pay attention to the next corrective pattern. The next corrective pattern is wave four. Remember, two and four are corrective. Okay. Okay. Now, which is the pattern here? It is an expanded triangle. A, B, C, D, and E. So the first two waves, this wave goes above the the initial point of wave A. That's why it is labeled as it falls under the category of an expanded triangle. Normally, wave C would also expand below wave A, but in this case, it does not happen. That's okay. It's not a rule though. So this is an expanded triangle, and in a triangle, I can label here so that you can understand. All right, and this will go as I just need to change the degree here. All right. So this is a A, B, C, D, E triangle, and then you see the thrust wave after the triangle. This is a thrust wave of the triangle. All right. And on the right hand side, if we look at what happened after that, so five wave rally followed by a three wave decline. Did you see? Now you see the pattern here. The three wave pattern is an ABC. A, B, and C. Now this is a 3, 3, and 5. So which is a pattern here? It's a flat pattern. That is 3, complex three wave correction. Please notice that wave B is not going above the wave A high, and it is then wave C is subdividing into five waves again. So it's a 3-3-5 pattern, and it took a flat. That's a standard flat. All right, so we've identified expanded flat or a running flat here, a triangle, a standard flat, and zigzag is left, correct? So let me try and show you how a zigzag would look. That's an easiest pattern. I'm going to take you on an hourly chart very quickly. Can you see this pattern? This is okay. I'm going to quickly label this as well because, all right, it all seems like very fast, okay? But believe it or not, once you start practicing, it is going to come quite easy and the way that we are doing it right now, it's not going to be very difficult, okay? The only thing requires, I mean, it's a lot of time that you need to spend on the chart, that's all. It requires spending more time, that's all. All right, that was the first one, 5 waves, motive structure. Again, followed by 3 wave corrective drop. So that was a zigzag, possibly. I'm labeling it as A, B, and C here. And I change the degree to sub-minute, sorry, minute. All right. So a zigzag is a 5 wave structure. You can see that it is 1, 2, 3, 4, and 5. That is wave A. And then 3 waves, A, B, C, wave B. Did you see that wave B was not deeper? When there is a flat correction, wave B goes deeper. It takes time. But when the zigzag is forming, it means business. It's a very quick pattern. And then again, 5, 3, that was a gap down open. Remember, this gap down open was after the U.S. administration declared the tariff, the tariff war started. I think it was 3rd of February. So the sub waves are not calculated, but it's a 5-3-5 pattern. So that's a zigzag. Again, over here also it's a zigzag. This one, this one, right? So we've seen a zigzag, we've seen a flat, we've seen a triangle. All right. Now let me show you. I won't be able to show you on the chart, but I need to show you at least on the screen what is a combination. Please sit tight and pay attention. It won't take more than 5 minutes. We've already done the practicals. The combination is the word, I mean, literally, as the word goes, it is called combination. So it's a combination of what? It's a combination of all the corrective patterns that we've just discussed: zigzag, flat, and triangle. So they all combine, come together. All right. So let's say the first one is a zigzag, the second one is a flat, and the second one is a triangle, the third one is a flat. The first one is a zigzag, the second one is a triangle, the third one is a zigzag. The first one is a flat, the second one is a triangle, the third one is a zigzag. All right, so you can understand so many combinations are possible. So this is what the WXY means. So first pattern is a zigzag. Let's say the first pattern is a zigzag. Now you know the pattern is labeled as W, Y, or Z. The corrective wave or the pattern is labeled as W, Y, or Z, like the 1, 2, and 3 zigzags, all right? And the bridge wave is labeled as X. So the entire pattern becomes a WXY, okay? Just visualize like this. The first pattern, this is the first pattern, is a flat, A, B, C. It's a standard flat, which I've labeled as W. The second pattern is a bridge, always X. And the third pattern here is a zigzag. Again, A, B, C, which I've labeled as Y. So this entire becomes a combination labeled as WXY. All right. The only thing is when there is a WXY, that means there are two or three corrective patterns itself. This is a flat, and that is a zigzag, and in between we have a bridge. Okay, and before saying thank you, it is also possible that there is there is a flat, an X wave, a triangle, and then a zigzag. So it becomes a W X Y X Z. All right. So this is a the combination will always take time. I'm not able to show it on the chart right now because there are no specific combinations formed recently. But yes, during the next practical sessions, the coming practical sessions, I'll find out these patterns. But it's a very simple to understand if you understand the logic. Logic is two or three corrective patterns, they are combined to form a combination. So when we say a zigzag, okay, there is a zigzag and then a bridge and then a flat and then a bridge and then a triangle. It makes a W, X, Y, X, Z. All right. So I think we will have to bring this session to a pause now. If you do have any questions, brothers, those joining from YouTube and Zoom, please let me know right now. If I can solve them right now, I will be able to. Or if you have any questions later on when you are revising or watching the video, please note this email address. It will be very handy. harsh.jappi, Japwe at gtcfx.com. Please feel free to write to me whatever query you have, or if any charts that you want me to review. I'll get back to you in less than 24 hours. That's what I normally do. And now from next Tuesday, we are we are starting again from the first story. So another 10 stories like one. It's going to be season 2. And again, a reminder: each Friday there is English live trading sessions, and Wednesday, and Thursday there is Hindi and Hindi theory and Hindi live sessions. Everything can be found on the website now. You can find every webinar on the website now. GTCFX.com, the main website. Okay, I've got a question from Arnold. Combination correction is yes, Arnold. Isaac, sorry. Isaac, the WXY is more like a double, triple zigzag. The only thing is, instead of zigzags, there will be a combination of zigzag, flats, and triangles. That's all. Instead of one, two, three zigzags, there will be a combination of zigzag, triangle, and flat. All right, this is the only difference. But the logic is once you understand the logic, it is it is not much important about the labeling. I never used to label WXY. I still don't do that. But I can understand that, okay, this is zigzag, this is flat, this is triangle. So it's a WXY. Otherwise, it's only when you're wanting to appear for an exam that you do it that way. But otherwise, it's okay even if you label ABC. All right. But yes, whatever you said is absolutely right. It's just like a double, triple zigzag. All right. So please, for those who have not registered for all the webinars, I'm typing the link here. Yes, Mark, it is definitely hard, but we will apply the time 45 minutes. I can only show the charts here, which we have done. We have to sit and apply. And yes, Jaideep, revision will always happen. Mark, don't worry. We are all here together in this journey. There are always going to be revision sessions. And please write an email to me. I will also, if required, I will also take personal session. Okay. Yes, the live. I've sent the Anthony brother. I've sent all the links here for the live trading sessions on Friday. All sessions are 4 p.m. Dubai time. If you are joining for English, then it will be Tuesday and Friday. If you are joining for English and Hindi both, then it will be Tuesday, Wednesday, Thursday, and Friday. Also, now everything can be found on the GTCFX website, all webinars. I think it is there in the trading tools section. When you visit the website, just a moment, sir. I'll see if I can share the link. Just a moment. Just a moment, please. Please go to gtcfx.com. Please visit gtcfx.com and then go to trading platforms. I don't know if you're able to see the screen, but I have not shared the screen here. gtcfx.com and then go to trading platforms. Jaideep, trading platforms, you will see weekly webinars. I'm not getting the link there, but weekly webinars in the trading platforms. Okay. gtcfx.com and then trading and platforms and then weekly webinars. You will find all webinars. You can register them directly from there as well. But if you have already registered, okay, if you have already registered, there is no need to register. Only for those who are doing it for the first time. Let's say, I think Anthony is doing it for the first time. So only for them it is required. Otherwise, if you have registered earlier, then it's not required. Mark, my brother, don't worry. I know it is it is a bit heavy for the first time, but please regularly attend the basics theory onwards, the next Tuesday onwards. You will find it more digestible as we meet every Tuesday and Friday and also practice in the live sessions. So please enroll for the live sessions as well. Live sessions, we implement what we do in the theory. Live sessions, we implement what we do in the theory. That is every Friday in English and every Wednesday in Hindi. All right. You can register for all sessions. Live sessions don't require language. All right. I can see that, sorry, I could not welcome the new ones. Anthony, I see for the first time. I also see Joe Evil for the first time. Welcome, Joe. And Merel Van is also seen for the first time. Welcome everyone. I have sent all the links here for all the webinars. I hope that you will register and join regularly. Tuesday and Friday for English, Wednesday and Thursday for Hindi. Thank you, Shuklaji, again. So thank you everyone again for joining. And I will stop sharing again. Shuklaji, thank you again as always. Thank you, Jaideep. After a long time, brother, I hope you are doing well. Thank you, Sam. Thank you, Mr. Rees. Thank you, Mark, for tuning in. Thank you, Mr. Anthony, Mirel, and Brother Arnold, and Brother Joe.
Thank you so much.
Thank you so much. I'll see you again on Friday for English, Mr. Joe. Please
Okay.
register.
It's all right.
Thank you.
Thanks.
All right, so we will end the session now. Thank you, Arnold. Thank you, Mark, and thank you, everyone. Thank you, everyone, for join. Those who are joining from the YouTube as well. See you tomorrow for Hindi.